Friday, December 12th, market analysis, Stan Ehrlich. I missed my show yesterday. I'm sorry. I was so much under the weather. I apologize. And what a day to miss. Too bad. You guys know I start out with stock indexes, go to futures, and then go to some stocks and sprinkle a bit of 53 years of experience in the middle. I have been talking about this market possibly, probably, my opinion, topping out since about the end of November when we had an accelerated rally up into resistance and it was starting to roll over but didn't finish rolling over. Instead, it went sideways and now, in general, a little bit higher on the average, but certainly not as fast as it was doing it from, say, November 21st through November 26th. Now, today, after yesterday, and I'm sorry about the recording, making new highs to yesterday, new high closes yesterday, coming extremely close to, in some cases, new historic highs yesterday, closing on the high of the day yesterday. All of that to the neophyte would generally look like very bullish. And I was ready to succeed about, my bearish expectations the day before yesterday on my recording. I was still talking about double top potentials, etc. And that's what we've got. In my opinion, this market has basically just double topped out yesterday on a very high, new high, strong, closing at the high of the day close. Don't get fooled by that kind of activity. It was right up against previous highs or very close to it in the case of the MES. What is the downside potential here? First of all, you have to get below 65.23 on a close. Then my minimum downside objective would be a little under 6,100 MES. We'll see how this goes. It's probably going to take a few months, couple months. Don't forget the Santa Claus rally. We look to be a buyer of a third of a position, usually the S&P. 3 business days before Christmas, 2 business days before Christmas, and the last third, 1 business day before Christmas. And that's going to be Wednesday and Tuesday and Monday, a couple of weeks from now. And then you're supposed to liquidate those positions 1/3, 2/3, 3/3, the first trading day of January, second trading day of January, and the third trading day of January. But why don't you just put a sell stop close to the offset and let it go up more if it will? Otherwise, you're jeopardizing a little bit of your profit if you've got a profit. If it's got a pretty good track record, I'm thinking, and I don't remember from last year at the moment, but around 75% over the last approximate 30 years. All right, let's keep going. And I'll tell you, by the way, in the days to come next week, what time of day to be a buyer those 3 days before Christmas. Next chart is the 15-minute. Let's look at how much damage has been done today. Chart. We opened a little bit lower, and the rally highs were about the close of yesterday. That's the best it could do. And for most of the afternoon session yesterday and the morning until the old-fashioned opening at 6:30 California time, then it started to crash and dropped off almost about 10 points at the low. Stabilized, bounced up, couldn't go anywhere, pulled back and closed significantly lower. This is in the ballpark of 9 points lower. New lows for well over a week. In fact, it tested the lowest low made on November 30th. New lows for the month. New low close for a week plus. Not what you normally see in a bull market, unless you were expecting in the first place a technical correction, which this could qualify as. Again, it's going to take a few weeks, I think, a month or two. In the middle of that, hopefully there's going to be a good Santa Claus rally just before Christmas into the beginning of January. But then January, February, maybe lower. Next, Spider. Almost the same story, of course, but look how close yesterday's high and close came to new historic highs, which is the red line here. Now, that was the top of the market on October 29th, with an outside trading range day, overbought conditions, but a higher close. And I probably mentioned bass backwards at the time. This looks bullish on the surface, but when you just gapped up for a possible exhaustion gap a couple of days earlier and you're in overbought conditions, it's almost exactly the opposite to me. Anyway, down we came, new lows, new low close, week and a half for the month, probably, give or take a day. Significant damage done to the bulls. We'll see what happens next week, of course. I am expecting generally a down week and maybe a couple of substantial down days. Next, 15-minute chart on the SPY. New lows since a cluster of little support area here for a couple of days. That would have been December 1st and 2nd. Yep. Next, QQQ. Wednesday of this week, managed to make a new high by just a small bit, only for this particular rally. Excuse me, not for the historical, which is that line up there. And it tried to close the old gap on the downside that occurred on November 4th, tried to close it completely. It almost did it completely a couple of days earlier, and it just fell apart. I don't think the rest of that gap's going to ever get closed. Well, not, I shouldn't say that. It'll take a long time. So now I'm looking for a test of support here, which I mentioned earlier, several days ago, I'm sure. And we almost hit it today. Then I'm looking for a bounce maybe off of 598-ish. And my downside objective to start with is going to be in the ballpark of 580. But this could be, if it's not a double top, which it's not quite looking exactly like or close to, a head and shoulder top with the last shoulder high late and a little higher than I would have expected. But that gap sucked it back into that price range, sort of, figuratively speaking, like a black hole in space sucks, material. So, new low close, week and a half, got to be or close to 2 weeks. Not good. By the way, none of these indexes are anywhere near oversold yet. Elbow room for more downside. Next, poor close, almost making new lows. That's the lowest low since November 26th today. Next, we do have a little head and shoulder top outlined in this case on the NQ, and the neckline is slightly downward slanted across the lows that were created on October 12th, and of course, oversold conditions on the low November 21st. So you come down to the neckline or close to it, and you have a bounce or two. Doesn't go very far, doesn't last very long, and then you crash through the neckline. The minimum downside objective is 21,450, let's say, a little below that. Yeah, and that's exactly what I'm looking for, assuming these patterns continue to develop as they should. And I'm going to show you a couple that have already done that in the last couple of weeks. The grains. Next, NQ. Wow, big break. New low since November 26th. Couldn't get through this resistance, and the high that day, the high the next day, 2 days later, almost exact same prices, and then yesterday on the close. Kaboom. Bearish. YM has been overbought yesterday and today, and so was the Russell, by the way, and had a higher high for the trend and backed up to the old high, which is support. I don't think that's going to hold. I think we're going to get below yesterday's lows real soon, maybe Monday, Tuesday, Wednesday, and even below the low of last week completely. And then we're on our way to a neckline, which I'm going to erase. Well, I'm not going to erase it. It's not a neckline. This is some variation on a double top. Not the greatest example, that's for darn sure. The downside objective would be the depth of the formation measured from the lowest low. And I don't know that that's a very good measure of the depth. Maybe a little higher. I'm drawing a line in my mind from here to here, slightly upper slanted. From the depth to the lowest low, okay, fine. And then the objective would be in the ballpark of Whoa, a little bit. There we go. 42.7. We call it 42.800. Yep. Yeah, I'm going to keep that line there because it could be pretty important. Next, the 15-minute chart on the YM. Now, the Russell is a different animal. It did manage yesterday and today to get above a major resistance level that's 4 years old. You can see how many times the market topped out in early 21 and then middle 21, and then it didn't seem to have much effect or any late 21. But the same prices resurfaced as resistance again in November of 24 and lately twice, October 17-ish and October 29th-ish. And now we're trying to get above it and stay above it and couldn't stay above it. The close, zooming in on the current data, was an outside, almost an outside down day. The low today was just a little bit above yesterday's lows, therefore it didn't get below. If it had gotten below yesterday's lows, this would have turned red automatically. That's my code, ER signals. And that would be a major sell signal, in my opinion. Starting to go down, I expect. First objective, 2305. We'll talk later about lower. Next, 15-minute chart, Russell. Got to prove itself more because it's just bouncing off a little support so far. But once it starts to get below 2514, and then, of course, new lows for 2 weeks plus 2460, 66, 2566, down it goes. All right, bonds. The head and shoulder top is working. We had a downside breakout on 12.5, follow through the next day, sideways the next day. A bullish engulfing, I said 2 days ago, I didn't think it was going to work. I don't want it to work. Yesterday, when I missed my recording, it did pop up above the neckline, but closed below it, up a bit on the day. But the closings are the most important when you're using daily data and stuff like that, usually close. And that's an exception. I forgive it. And today, kaboom, new lows for the trend down, new low close below all previous lows. And now we are pretty close to halfway down in this downside objective, which I've been talking about for at least a week. 112, 10, give or take, a few ticks or more. Same thing for notes. Heck yes. But a little exception here. Yesterday's activity was at and above the neckline, including the close. That is supposed to be a killer, usually, to a head and shoulder bottom formation. And we did have that bullish engulfing like in bonds, also in notes on Wednesday. It worked for a day. And I said the same thing. I didn't think this was going to work. I don't want it to. But so far, we haven't been below the low of that bullish reversal on Wednesday. That definitely kills it. And I think that'll happen on Monday, Tuesday. Downside objective, minimum 110.16 or lower. Next, crude oil. Dipping down to a little support as of yesterday and bounced off it again today, but the closes continue to sink. I expect to see support yesterday and today's lows broken on the close. Next support down around 55.80, and maybe we're going to even come down to a much lower level. This major support area at 51.60. Yeah, right there. So, next, natural gas. Got overbought one single day. Oh, and I see my strategy is not running. I apologize. I'm going to miss a few of them there. So this is a standard candlestick, not customized colors for the body. Nevertheless, support and resistance are the same. You just don't see my ER signals if there are any. So down we go. Next support, probably testing lows back in October. After that, probably even lower. An old downside objective I don't want to really talk about at the moment, but I'm basically bearish. Now notice we're very close to oversold, so one or two more down days to test support at 377.10, 3.77 period, will cause a bounce. I wouldn't be surprised if that happened. So we're so close to oversold. One more good down day into support, then you bounce. Next, the down move in heating oil continues, closing around yesterday's lows. Yesterday we broke support, and I'm not quite sure whether I want to call this a head and shoulder top or not. I got a bunch going at the moment, maybe too many, but that's the way it is. I didn't do it. Is this rally high on October 27th, the shoulder high? And that's the point, the lowest low between the shoulder and the first head or only head is the pivot point. Then you've got the highest high and approximately the same amount of days you'd expect. We got another high and a bounce. And it's also in the same approximate price range as the first shoulder high, which is also normal. So the timing looks okay. It's just that these shoulders are so small. I would have expected them to rally up closer to, 2.4, 2.45 or something. Nevertheless, they're there. Timing is good. Neckline's almost flat, typical, slightly downward slanted. And we broke out to the downside with a big downside move yesterday. A key that neckline is legit. We had more downside follow through today. So I will quickly measure the downside objective on this hypothetical. And again, it's not my favorite at the moment by any means. There's your depth of the pattern. You grab your little stick here, and on the breakout day, which is today, which really was yesterday, with the same thing. But I've got a line there already. So 169.44 or just a little bit higher is the minimum downside objective. Next, rally up on gold, but we're coming close to a double top and we are overbought. So, double top coming up. Darn right. Good potential. Watch out. We're about to top out in gold, I think. Silver, we had an outside trading range today with a lower close in overbought conditions. And if my strategy, I'll just turn it on for you. I'm sorry I missed this before. No big deal. Click, go. It's going to take approximately 5, 7, 8, 9 seconds. All these bars will turn white, and there they are, marching along, and boom. New bearish engulfing ER sell signal in silver. I gave all the warning I could. RSI got extremely high. I came close to screaming bloody murder, but not quite. It took it a week and a fraction, and this is it. Today's the kiss of death, in my opinion, on silver. It should be coming down to below 54, and I can't rule out down to 45, 46 rather. Yeah, 46, 48 to 46. Next, we've got platinum. New high, but it didn't close above the previous highs. One of my little rules. This looks bullish from almost every standpoint you can come up with, except it's also overbought. And we did have a couple of these ER sell signals in the last week or so. That's another one right there. I didn't put a red circle around it, but that was Wednesday. Didn't work. But these sell signals and buy signals are not necessarily the highest high or lowest low for a trend change, and they are frequently, but they are sometimes part of the topping out or bottoming out process, which it looks like these couple of signals are probably. So I'll adjust that for Monday. I think this is also rolling over and starting to come down. Next, outside down day in copper. Bearish engulfing, ER sell signal. Again, I'm sorry I didn't turn the strategy on. This would be red as red, period. And that's the killer. Close below or at yesterday's low. Higher high, lower low, overbought conditions within the allotted number of previous days. That's important. Doesn't have to be overbought the same day that it happens, but that's nice. That's good. So now I think we're starting to move down to 4.9 or lower. Next, we've got a new low close in soybeans. The head and shoulder top has worked outstandingly well and has now not much more to go to get to its minimum objective of 1060. Closed at 1076 and a quarter on the low. Oversold. Wouldn't be surprised to see it bounce small. Not much time, few days. But I think maybe by the end of next week or sooner, and it might take 2 weeks, it'll be down to my downside objective of 1060. Next, soybean oil is breaking down. Support's giving way, but it's not finished yet. It's still above a good support level. But if you do break on a closing basis below 49.70, you've now got a little double top that I've had marked here for well over a week. And you've got a downside objective because of that of, it's kind of mild, 46.88, maybe even lower. Oh, it's also support from back in here and beginning of June. Yeah, of this year. Sounds reasonable. Next, we've got soybean meal. On Wednesday, I said, and it did finish getting to its minimum objective on a head and shoulder top, which broke out to the downside in classic form on December 1st. What can I say? Boom, boom, boom. Rally didn't hold, closed poorly. Boom, boom, boom. And then Wednesday, a little bit sideways, a little bit up yesterday. And the objective was met on Wednesday. The game over. It got to where I said I was going to get to, plus a little bit more. I don't think it's finished yet. I think we're going to see lower levels. Next, corn breaking down, new lows, new low closes for looks like a couple of weeks since November 26, 7, 8, and support, but head and shoulder top, extended right shoulder a little bit, now starting to show its colors. Don't think these lines are going to hold. Bull trend line, an old top of a wedge or neckline. If we do see it start to close below this, that cancels out completely this old upside objective of 485, at least for the moment. I'm thinking double top. Oh, no, I'm thinking small head and shoulder top here. Downward side of the neckline. Minimum downside objective to test the lows we had it back in August, which, by the way, we got with a buy signal on August 14th. Green, bullish engulfing. And look at the move that happened after that. Wheat. Almost new low close. Almost new lows. Coming fairly close. No sign it's going to turn up. Not oversold. New lows coming up next week, in my opinion. We're going to go down and test these lows at 506-ish. Okay, Apple, computer. Sideways. A little surprised it didn't break down some today, but it didn't. It held. I still think it will. Downside objective minimum closes the gap at 264.10 maybe, right around 64. Then there's another gap to consider, 252, call it 253. But the major support is still a little lower than that at 240. So maybe all the way to 240. But these two gaps here are definitely in sight. Next, Tesla. Strong, close, new high, close. But again, we are approaching these two other highs back here. I'll pull this line over to the right, keeping it still flat. And there we go over here. There it is. So this could be a triple top, although they are very rare. Very rare, actually. And I haven't seen one for a long time, multiple years, probably maybe over a decade. And not that close to overbought, but not far away either. So I'm going with triple top for the moment and see what happens. Next, NVIDIA, outside down day, not overbought. As a result, we're not getting a red, but this is bearish. Not oversold yet. Looking for a test of support here. Probably down to about 164, and that looks to be on the shy side. I'm going to go with 152. Next, another outside down day in AMD. Normally bearish, not oversold. Unfortunately, not overbought within the allotted number of back days, so it didn't turn red. But it's all there except for the overbought condition to turn red. Bearish, certainly looking for a test of the earlier November 25th prices of 194-ish. But this is an old gap to close all the way down to 170.90, a little below 171. That's my expectation. You guys have a great day. and profitable trading to you.